What's going on? Let me get the chat real quick. All right, cool. Just had to do that. Um, this is ETC. I don't care about ETC, and this also isn't the chart layout I want to look at. Scratch, and let's go ahead and delete everything because that's just how I like to do my videos. I like to redo the whole thought process. So I actually don't think I got to make a video these past 2 days. Um, let's see. I think the last video I made was on the 9th. Today's the 11th. Yeah. So I basically, we missed this whole candle, which is fine. It's a great time to not make a video. Not, shit's not happening. We're just going down. Um, and I had already marked out where we were going to stop. So there was nothing to really update. But yeah, so we kind of broke down finally. Thank God, because that shit was incredibly annoying. It made no sense for us to be rising the way that we were. As you can see, we were on this trend line. We had a retest right here after we broke it. And then we established this trend line. And then you can see we broke it here. Classic fork. Easy trade, breakdown. Yeah. So this is where we're at currently. I'm going to go ahead and mark out the order blocks that I care about. And then I'm going to fib it out just so you can see the horizontals. I always like to look at the horizontals first. Well, I mean, it depends. It depends how hard the market's trending. If the market's trending really hard, maybe I want to look at the diagonals of the situation. But for the most part, always look at the horizontals first. So the first thing, this rectangle. It's a fucking order block. I don't care. This order block, that is, again, and if you watch my videos often, like, bear with me, but just understand it's important that I mark out these blocks every single time, because sometimes, it may be on the 20th day and I'm like, wait, I'm drawing this block wrong, or I could be drawing it better. So just know that I like to mark them out each and every time I start a new analysis. Keeps me unbiased as much as possible too. 4-hour order block, the last up candle before the dump, right there. Mark that out. Make that purple. If I'm looking at the bullish order blocks, and basically what I'm gonna do is I'm gonna look up here at the top of the range, look down here at the bottom of the range, and then try to find the ones in the middle. So basically work my way in. Bullish order block. This is probably the best one. And even, there can be multiple order blocks that you choose that may define your support and resistance levels pretty well. I'm not gonna lie, sometimes it's subjective, but I mean, that's just how it is. But I like this one. I think this makes the most sense. It was the last down move, as you can see right here, before we exploded up. And then we kind of came back, traded in, grabbed some more, I don't know if you want to say grab liquidity, whatever. We reached into an area where demand was higher than supply. There was more buying, more orders got filled, and then we took off again, right? You can see every time we've touched this order block, it's been a vicious move to escape. Even this wick, right? Because we're trending hard down here, came into this area. If you wanted to extend this left, wicked in here and then said, oops, absolutely not, right? So that's kind of like the mentality you want to have when looking at your order blocks. And so that's like the lower range of the zone. If you notice, and I want to be honest about this, this is important. If you've been watching my videos, I've been taking like this cluster of down candles along with this wick kind of, or no, I've been taking this right here. Let me show that. I've been taking these candles and using them as my order block, right? So what I've been doing is, let me extend this out. What I've been doing is using this as my order block, which is, you know, that's not bad. It's not wrong. It's not the best, but it's not wrong, right? And so what I've been doing is I said, okay, price traded down in here, down move, came up, traded back inside of this block for more demand, explosive move up. And that was basically my logic. But now that I had some time to really look at it and marinate, I actually don't think this is the best way to represent this support and resistance level. I actually kind of want to focus on using this candle right here, this last down candle on the 4 hour before this up move, because then if you do that, what happens is it looks like we had, it looks like we had this down move. Then we came up, and this is a pretty decent move, came back in, grabbed some more liquidity, came back in, and then really, pumped again. And the other reason I really like that, not only does it capture more of these grabs for demand, but you'll notice each time we grab demand, it was a higher low, which is important for just like the psychology of markets. This was bullish behavior, higher lows and higher highs, right? If you just look at the lines, which I strongly encourage you to do if you're ever trying to figure out what's a higher low, what's a higher high. Fuck the wicks. Look at the closes of the candles. Some, market maker can accidentally hit market buy instead of limit buy, and cause a long ass wick. So you really want to look at where the closes of the candles are, where the market decides to stop trading for that interval because that's a fair price, right? And so this is bullish behavior. I like this order block better, Came in here, boom, boom, boom. And also you can see right here, price didn't just stop here for no reason. If you look at this, right? This is the close, the lowest close of the candle. Price didn't stop here for no reason. If you look left, you can see there was some interaction with this level. Again, interaction with that level. Again, interaction with that level. If you wanted to keep this a line, you totally could. Y'all know me, I love horizontal lines. But I like rectangles just for my sanity. So I basically want to figure out, this is how I like to draw it. And this kind of gets on my nerves when my rectangles are very close, but I honestly think this is, at least for me, in the way that I want to trade this is the best way for me to draw this rectangle. Now my methodology here isn't going to be a single down candle before an up move, even though that's, generally how I like to do it. But what I'm going to do is I'm going to take the lowest wick opposite of the dominant move. And as you can see, the dominant move in this case was this candle right here. That's what I mean by the dominant move. So the wicks opposite of that, the lowest one, which would be here. And then I'm also going to take the closes of the candles that form like the base of the top one, which would be here. A lot of closes near here. Now you could totally, like if you wanted to, extend it over to these candles right here, but this was kind of like the exhaustion of a move, so I don't like that. So I wait for it to retrace. Damn, can't pick it. Why can't let me choose this? Yeah, so I wait for it to retrace back down here, and then the candles that form this high, as far as the close of the candles are concerned, that's what I'm going to use for the top of the block. And actually, if you look to the right, you see that's actually worked out very well. Wicks and closes all in this vicinity. So that's how I kind of want to use and draw that order block. Totally a fair thing to call this an order block. Last thing I want to point out real quick is I saw this in a Discord, and then I also saw it on Twitter. Somebody shared it with me. Somebody said, do not call this an order block. I'm just gonna have to disagree. Call it an order block if you want. Like, they're all just rectangles at the end of the day. Um, all of this terminology for technical analysis, a lot of it really just means the same shit, but it was repackaged to mean different things, right? It doesn't matter. At the end of the day, you know that you want to short this block. If you want to call it, you can literally make up any, you can flip a page open in the dictionary, close your eyes, and just choose a word at random and say that's what this candle is. Okay, who cares? Like, the definition is arbitrary. You're not going to make any more or less money depending on what you call it. Now, if what you call it will alter how you trade it, then yes, the definition is important, because the definition tells you exactly what this is, and what it is will determine how you want to trade it. But if how you trade it doesn't matter, then who cares about the word? You know that this was a candle where there was some brief consolidation in the middle of a move before the move continued. You want to short it. So whether you want to call that just a support resistance level where you draw this line right here and you look to the left and you see, okay, resistance, flip, support, support, flip, and then you expect it to act as resistance again. Like, who cares? Nobody cares. You're just gonna short it. Right? So I really think that's important, because I don't want people who are like new to trading think that like these definitions are just so important. They are. Like, you should understand the idea of what something means. But at the end of the day, if you wanted to go into the 5-minute and you wanted to be like, and you wanted to do this and get all the closes of the candles right here, this is an order block. Right? It's not on the 5-minute anymore, or the 1 hour anymore. It's on the 5-minute. And now here it is on the 1 minute. This is a block of orders. Who gives a fuck what you call it, right? So I just really wanted to hammer that home. I don't want people to get like discouraged because you're like, oh, I thought that was an order block and somebody told me I was stupid. It's like, no. If you long the resistance level, you're stupid. But last thing I want to do is mark out a fib now that I have my horizontals, because now what I like to do is, once I have my horizontal levels marked out, I want to see which fibs are in confluence with the levels that I've marked, right? So you can see, you look in the up here, the high of this candle is 68.68, and I use magnet mode for that one, so I didn't have to worry about the exact price point. But yes, so this is how I'm looking at price. You can see beautiful interactions with each and every fib level. I actually don't trade with the 38.2 fib often, and definitely not the 23.6. Moves that don't retrace that in that shallow of a manner, I don't really care about. I pretty much only look at the 50, but because I had this order block here that I knew I kind of wanted to, I'm short from, where am I short from? I'm short from 67.65. Where is that? I'm short from, I can't see, I'm blind. I'm short from here. I caught this wick right here. I shorted here. What did I short? I shorted somewhere right here at the close of this candle. Closed here because I didn't think we were gonna dump as hard as I would like. That sounded really weird. And then put more orders here, and then I caught that wick. So I'm short from here. I want to add to my position right here. I took 50. Did I close 50% of my? Yeah, I closed 50% of my position right here because of the leverage I was using. It was over 100, so I closed half on a double to make sure I got my initial investment back. And now I'm looking to add to my short right here, somewhere in this order block. So when I saw that, but saw that there was no fib corresponding with this order block, that's when I was like, okay, let me look at these other fibs. And I turned this one on, and then, I mean, boom, it's right in the middle. Give me like 10 seconds. I gotta plug in my laptop. All right, cool. Hope that audio wasn't too horrible. But let's see. Why is this not charging? Apple doesn't want me to succeed, y'all. Hold on. All right, powered up. So I'm looking to add to my short position somewhere in this order block. And that's pretty much what I think is going to happen. Just the implications of that statement means that I'm under the assumption that it's a wise decision to add to my position here, which means I do think we're going to retrace to some degree. And I could be wrong. We could completely just consolidate here and then dump, even further. But I think that we pop up here a little bit. Oops. And then I think after we do that, we continue downwards. Now, if we touch the bottom order block, that remains to be seen. I don't know. This is currently my ideal scenario. This is what I'm looking to take place, or what I'm looking for to take place. There is, if I zoom out, zoom back in. There is there's something happening right here in this like general zone. To where like once we dump further down, I might look for support here around like 61.8 and 71% of the move. If I look at the volume profile of this whole region, the point of control used to be right here. So we could totally just like not go all the way down, but we could come to like, maybe around here. That's also a valid situation. I don't know. I just do know that I'm looking for a move up. And then once that move up happens, I'm going to look at the volume. The volume is important. Let me show you why the volume is important. I'll bring these back later. The volume is important because for an inverse head and shoulders, because I know that's what a lot of you all are looking at, where we have this setup, and I was looking at it too. I mean, it makes sense. It sticks out like a sore thumb, where you have a low and then two higher lows on each side, right? If this is going to be valid, the volume here, the buy volume here coming off the right shoulder needs to be significant. The reason why I don't think that will be the case is because, let me zoom in so I can see what's going on. We were in this scenario where we were increasing. Let me find that bottom right here. We're increasing on decreasing price. And then you saw on the dump, price or volume broke that trend line. And the bear volume, the sell volume broke that trend line. That lets me know, bears made an appearance. They're here. They did all their selling right here, and they're committed to going lower because they spent all that time doing that selling up here. That being said, if the bulls show up and there's a large spike in buy volume on this retracement up, or even if we break past this order block, where's the tool? If we do something like this, consolidate, and then pump, that's bullish. This part of that move needs to be on high volume, as well as this part of that move, high bull volume. I'm sorry, that's just the only way it works if you're bullish. Oops. What I think will happen is we will see this move up on low volume here again before we continue down. That's just what I'm thinking. The other reason I would like to add to a short position here is here. Y'all know on the channel I've been talking about this often, the 12 and 26 EMAs. I actually got these from, was it TCG, the chart guys on YouTube. He uses these EMAs often, and I've liked them a lot ever since I started using them. So you can see that these EMAs these are basically dynamic support and resistance levels. You can see these EMAs are right in this order block. So I'm looking to add to my position again. You can see the confluence of the order block, the 38.2% fib, and these EMAs all coming together right here. That lets me know, yeah, I definitely want to short here. And I want to put my stop, or I want to move my stop, which I have moved it. I've actually moved my stop to about 6,600 just to be safe. Any ridiculous wicks come up. But you definitely want your stop to be above this order block and above these EMAs, because price could definitely retrace and come up in this area. I actually set my stop based on another EMA indicator, of course, the super guppy on the 4-hour, where I see the slow EMAs starting to twist down. You can actually see the fast EMAs have started to turn blue, which is a shift in bearish momentum for traders on the 4-hour. And so my stop is at 6,600 because I want them to be above the slow EMAs on the 4-hour. On the daily, where are we at? I mean, the daily, we're still bearish. My stop is up here. So again, back up in the investor EMAs. So bulls would have to make a very tough showing to stop me out, which is like the point of a stop, right? That lets me know I'm wrong. Reasons I think will retrace up. The other oscillators I really like the ultimate oscillator. Not just the normal one. Let's see. Crypt has the log space ultimate oscillator. I really like that. And of course, y'all have seen me use Lazy Bear's OBV oscillator. Great indicators for divergences. So I see we're at support. And I see it was very subtle, but let's see. Well, I guess it's not subtle at all. But I see this flat line of the closes of the candle right here, double bottom, along with the oscillator like increasing. That is exaggerated bullish divergence on the 1-hour. So I'm expecting some type of retracement up here. And I can also see like a low or a higher low, low, another higher low type of pattern. So I'm expecting a small retracement. And then that's on the 1-hour. And then on the 4-hour, you got this where price was making this lower low, but the on balance volume was increasing towards the buy side. So there was less sell volume, less sell pressure, but we were making a lower low. That's a divergence. So I'm expecting this to play out a little more and pop up. And that's my reasoning for the retracement. Albeit small. Oh, I guess the last thing that would be good to look at for the retracement is this. Never thought about this. Fib this out backwards, basically. Not backwards, but you know, fib this move. The low of this move is 62.60. And I'm guessing I'm looking for a shallow 38.2% retracement, you know, somewhere up here. And if I look left, I mean, again, it's in this order block. So, yeah, I mean, that might be something to look at, actually. But yeah, that's kind of where I'm at on Bitcoin. that's the I'm very much more partial to the bearish scenario. The bullish scenario is valid if the bulls do this on high volume. Don't think that'll happen. I think we're more likely to see this. That's pretty much others on Bitcoin. Let's see. I have a couple questions. For your order blocks, do you draw the rectangle from the last up or down candle before the major move, up or down? Could you demonstrate on a random alt when you have a moment? Yeah, sure. I'm sure an order block will pop up on an alt. Somebody asked me to look at Tron, Litecoin, and Ripple. And then look at the BitMEX alts. So I was actually having trouble with this, like, because I'll show you. BitMEX futures contracts, that's what you trade. It like changes often, and so there's not a lot of like history, and that shit's annoying. And so I was asking, like, where the fuck can you chart BitMEX coins? Because you need the history, and the price isn't always the same across exchanges. So Litecoin on BitMEX right now is at about 0.01243. But if I go to Litecoin on Binance, it's 0.01223. That's a huge difference. Like, depending on where you place your orders, especially if you're talking about leverage, like, that's important. And so one of my friends told me look at like the exchanges that BitMEX uses to base their pricing off of. And so I think Poloniex, nah, the price is still different. So it's hard. So what I'm gonna do for the alts you requested, I'm going to do them on Bitfinex, because I mean you can do leverage on Bitfinex as well, but I can't find, unless I like go and find the formula, which BitMEX has on their website for how they calculate the price, and then do the math up here with like these tools in TradingView. I'm not gonna be able to get an accurate price, and I don't really care to do that right now. So Litecoin, let's see, that's how you know it's an old chart, because I don't use that color anymore. So what do I want to know about Litecoin? Well, first of all, when you have like this huge gap right here, there's this idea that gaps have to get filled. So if you have like this huge up move like that we got to come down and retrace and take back some of that. Just off the top of my head, this clearly looks like some type of support and resistance level where, yeah, I mean, it's totally a support and resistance level. You can zoom out and see it. Interactive here is resistance. This was some bullshit. I don't know what that was. Resistance, boom, support, boom, resistance, pump. And so, I mean, if you're looking to go long, what you're gonna look for is this daily block, this daily candle that happened on December 10th last year. Put a line right here at the open of that candle, the close of the previous day. And I mean, that would be a great target to go long from if you use no other technical analysis, just that. And then put your target, I don't know, somewhere here, because you have this level. I don't know. As far as order blocks are concerned, I see one that I want to use, but I'm going to go to the weekly because I like the weekly chart. So to answer your question, yes, generally I try and look for a clear-cut down candle before an up move or up candle before a down move for an order block. But then, like, when you get bullshit like this long ass wick, it's like it wouldn't be justice to use this last down candle, which was a doji anyway, as an order block. You totally could, because clearly that's an area of support and resistance, where it was support here and support here, and then you're going to look for it to become support here. But it's just like, do you really want to like ignore these stop runs, I guess? I don't know what you want to call them. Those long deviations. So for me personally, if I'm looking at Litecoin, I'll keep that there actually. That wasn't a bad block. But for the daily, I'm probably going to use this candle. Oops. And then I'd be trying to go long somewhere in here. If I wanted to go long on Litecoin, I mean, you would need other market conditions to tell. The trend is clearly going down. But if you would like to catch a bottom, this seems to be a very obvious bottom. Again, because if you extend the line left and right, you see that this has been, you know, an area that price has reacted to. So if you look left, let me zoom out to the weekly. Actually, if you look left, I guess you can't. You see price doing a lot of bullshit here, trade up in here, did some shit, trade up in here, did some shit. You know what I mean? So you would expect for price to come here, and then you would go long somewhere in this box, maybe layer your orders, and then do that. So that's what you would be looking for. Maybe you want to fib this out. That would be useful, just a quick fib. And then you're looking at the 78.6 retracement. That looks good to you, and you're like, okay, I'm gonna put orders, you know, somewhere around here. That's what I'm looking at for Litecoin. It doesn't look good. It looks like it's in a very bad distribution phase, or markdown phase. This was the distribution markdown. Yeah. And if it were to break this order block, whew, then, you know, then we're looking down here. Then it's bad. But you would expect some type of higher low for the overall market, where we do this, and then this, fuck that wick, and then do some type of higher low there. Light trash. Yeah, I don't know why people like Litecoin. It doesn't scale. But okay. This video is much longer than I want it to be. That's why I'm trying to go kind of fast. Forgive me. Tron, so I'm gonna ask for Tron. Again, if I was looking at a weekly order block, this will be, again, one of those cases where this wick is just longer than I would like it to be. So to be honest, and again, technical analysis is very subjective. It's about creating the story that you want to create and then seeing if that story makes sense given the current market conditions. If anything, what you should think of technical analysis, like your TA, as a chapter in a book. And once you create your chapter, you're essentially trying to figure out, does this make sense within the context of the rest of the book? That's how you should think about it. Damn, I need to trademark that. That's the best analogy you're ever gonna find for technical analysis. It's you writing the chapter and then seeing, does your chapter make sense within the context of a book? You could write whatever the fuck you want in the chapter. You create a bullish or a bearish or a neutral scenario for anything. And it really doesn't matter. You could be like, even though we're clearly trending down, you could be like, nope, this is a bottom. And that's your bullish, you know, that's your bullish scenario. That's your chapter. But you have to figure out, does this make sense as a bottom? Perhaps, because you got some consolidation over here. But maybe not, you know? You could create a bearish chapter and be like, oh, nope, we're actually going to attack these lows. Well, does it make sense to attack those lows given we're at this area of consolidation? Again, you have to figure that out yourself. Does Tron have a chart with a longer history? Binance maybe? Yeah, Binance kind of. You could totally, I think I would like to use the body and then maybe that lower wick, because that was when, you know, bulls kind of kicked in and there was some demand here, and then we, you know, but again, subjective. You gotta figure out what you want to use. But yeah, this is an example of like a small up move before a vicious down move. That's what I would create for my order block. As we said earlier, I do think this is a possibly a great place to go long. Trying to think. Trying to figure out what's the best place to put this candle. Just because you have this whole block of like consolidation right here. It's like where do you put the horizontal? Let's see. I could totally take that last little down doji right before the up move here. I think that makes sense, in which case we're at a support level. But then at the same time, I would totally caution you to mark out, or encourage you, I guess, to mark out like these lows maybe. Just in case we break this and you think it's the end of the world. It's like, no, we broke this, you know, green rectangle, but there's also these horizontals here as well. Zooming into the daily. Yeah, candle spreads are getting smaller as we're approaching this area of demand. Actually, I really like this block now. Now that I'm looking at it. But looking at the daily, I'm going to save these for the weekly time frame because I actually don't like them on lower time frames because I'm looking at something that I like a lot more. What I see is this down move, these candles here. You see these two candles, that's a down move. On the daily, you could be like, but wait, Nick, that's two candles and not one. Well, guess what? You can zoom out to the fucking 1 day or the 2 day, literally get the same candles. 366. 24. If you zoom out to the 2 day, you can be like, this is a 2 day order block. And now look, you have your one candle. All that shit doesn't matter. If it's one candle, two candles, you can fit whatever time frame you want. The point is, we had this down candle, and then we came back in, made this higher low, right? We exploded out of the zone, came back in, made a higher low, and then we took off. We literally green candles every day, except for some brief pullback here. And so now we're coming back and we tapped that zone again. And you know there's demand there because we wicked right up. We tapped in, we were like, ooh, people want to buy here. So now what you should be looking at is, where do I go long inside this green box? That makes the most sense to me. We could totally dump right through it, but that's not what you care about. You care about high probability and low risk. The high probability scenario is here. 88.6 fib. At the end of the day, you know your stop has to be below here. That's the important part. It has to be below this area of demand. And then as far as where you want your targets to be, I mean, that's, I don't know. You're trading against the trend, right? The trend's clearly going down. So you might want your targets to be a little tight. You definitely want your target 61.8 right here. There's an order block here. Maybe you want to take profit out. Take profit here. Maybe we attack. Wait, what did I just do? Maybe we attack these lows again. And so maybe, you know, take profit here instead. Just depends. So, but you definitely want to take profit sooner rather than later because, like I said, we are trading against the trend. And if we end up breaking bullish, we'll then just wait for a pullback and enter there. Last thing somebody asked, we broke this order block. I was using a 3 day order block. And see, look, this is a great example of why you should fucking use the wicks. So what I should have done is I should have taken these basing candles right here, and then the lowest wick from opposite of the explosive move, and then my stop should have been under here. I didn't actually use this stop that this tool is showing. It was tighter, but yeah, this is a better order block. And like, see, I don't do these videos for y'all, doing for me. Because now me saying this out loud, I can see that and make that adjustment for next time. But yeah, so this is the 3-day order block. Going into the 1 day, I'm looking at this. I see a lower low being created. And I see, what do I see? Less sell volume to do it. Same thing with the oscillator. So both volume and price are saying go long on Ripple, sir. It's begging you to do it. And so you should totally open up a low, or at least me. I know I'm probably gonna do this after I end this video. I'm probably gonna go long on Ripple here, and then I'm probably gonna create a stop. Luckily, I can keep it tight because we're so far, towards the bottom of the order block. And I'm probably going to target, I don't know, some levels, some support resistance levels as defined over here for targets, or just whenever I feel like I've made enough money. But yeah, so Ripple's a good place to go long if that's what you're looking for. If we zoom into the 4-hour, maybe we get a better view of shit. Not really, kind of the same thing. I might actually just wait for it to pop off, because what's going to happen is it's going to take off, and all I need to do is wait to see where the bullish order block is over here, and then enter on a retrace and then go, versus trying to catch a bottom. No point in catching a bottom if I don't really know exactly where the bottom is. Let the market create the bottom first, and then when it pulls back to it, then catch that. But yeah, so that's pretty much all I have for today. I will see y'all later.